Hi, Tim Bigham back again this week for Traders Exclusive and another crazy week in the markets, to say the least. We have a two-day Fed meeting which came out Wednesday at 1 o'clock with the statement it's going to be $85 billion from here until further notice. Some of the language that was omitted gave a little hint that tapering's on the way. I personally think that until they taper, there's no reason really to be guessing about a word or two omitted. I think taper is on for the foreseeable future, but the market's reaction was a disappointment, to say the least. They were looking for perhaps an increase, believe it or not, in that 85 billion level. Some market practitioners were, even looking for over 100 billion a month, but for the foreseeable future, I think it'll be 85 billion, and that kind of means that the stocks got ahead of themselves a little bit, certainly on valuations. I look for a little bit of a pullback here. As you know, I've been less than bullish this market and continue to be so. So I'm looking to sell out of the money call spreads on a lot of those momentum names, stocks that have come out with earnings and have been greeted with less than favorable kind of market action. Netflix traded up to almost 390, back around the 320 level. I'm looking out in November and December and selling one standard deviation out call spreads, the 350, 355 in Nova, and using the 370, 375 in Dees, getting about 70 cents or so on each one of those spreads. Similarly, a name that came out with earnings and wasn't really a resounding success post-earnings was Amazon. Again, looking at that 380, 385 level in November, 390, 395 in Dees, again collecting about 75 cents premium. I'm looking to kind of do that as a trade structure going forward generally on a lot of these high flyer names that have been big outperformers, and one big outperformer, to say the least, has been the transports. Name like FedEx, which up until Wednesday had been up 12 days in a row. I went back to January of 1980, and it had never happened before where we had FedEx up 12 days in a row. In fact, it had only been up 9 days in a row 3 times. So in that roughly five, or I forget how many thousand trading days, certainly it has never had this kind of straight up move. Finally being met with a little bit of a pullback here. I look for that pullback to continue, so I'm selling some out of the money call spreads on FedEx. They're coming out with earnings, but UPS came out and they barely made it on the earnings side. We're a little bit light on the revenue side. I look for just kind of the same thing on FedEx, where the valuations is trading over 25 times forward earnings, which is getting very pricey indeed, the highest level that that's traded at in since really the financial crisis. So looking at a stock that is stretched both on a technical level and also on a valuation level. So I look for FedEx, now that it stopped going up, the Momo is a no-no, to kind of waffle around in here, certainly maybe even a pullback, and I'm selling the 140, 145 call spread in November and December both. So just looking for this market, which has been a little too red hot, looking for a little bit too much, and ultimately earnings do matter, and earnings have been okay. Revenue's still light, so to have a multiple expansion continue when we're already at extremes, to me, seems a little far-fetched, but as always, keep those position sizes in place and your risk levels appropriate. Take care.